Hey everybody, I'm Catherine Cheek with the Cheek team of Keller Williams Realty. And I have Peter Martino with me today with Guaranteed Rate. Hey Peter, how are you?
I'm good, Catherine. How you doing?
Doing well. Thanks so
Good.
much for hopping on. It's been a minute since we've had our market updates, and
Yeah.
I'm really looking forward to touching base after the holidays. And now that we're into a whole new year, seeing what has recently come out with the Fed and what's going on with these interest rates, and how it's affecting the real estate market, and just your insights and the mortgage industry.
Okay. So just briefly, let's just recap where we were. The last time we spoke, I was mentioning to you that the Fed monetary policy is not directly correlated to mortgage rates. What's impacting mortgage rates more than anything is inflation. And so the Fed, by hiking rates, has trying to battle inflation, will bring rates down. So that's what's happened. The Fed has had a series of rate hikes at the end of last year, and we saw rates come from 7.25 to now they're in the low sixes. So it's working. And
Good.
the Fed met the other day, and they're going to continue to increase rates, but not at the 75-point basis that they were doing before. So it's not going to be as exaggerated, but they will continue to still fight inflation. And we think that rates are going to be in the fives, low fives by maybe halfway through this year is what we're kind of anticipating. There's no guarantees there. So what the Fed is doing is actually working. And then we just hope that that continues. Now, tomorrow, the consumer price index comes out. That's going to be a leading economic indicator for inflation based on December's numbers. And we hope that that inflation is coming down a bit, and rates will love that. Mortgage bonds will love that, and we'll see another drop, hopefully. So that's to be tomorrow.
Okay.
So the other thing I wanted to jump to right now is real estate. And the media has been talking about a housing bubble for some time now. And I want to share my screen and show the folks out there a little bit of statistics on what real estate has been doing. Actually, I'm going to go back to 2015. Catherine, can you enable screen sharing?
Yes. Give me just a second.
Sure.
There you go, Peter. You should be able to share your
Okay.
screen now.
Okay. All right. So housing bubble fears. You see that?
Yes.
Okay. So if you bought a $300,000 home, I'm going to use my cursor. If you bought a $300,000 home in 2015, and you listen to what the housing gurus in the media were saying, is that a bubble larger than 2006. And what happened was prices appreciated 5.1% or $15,000. Then in August 2016, we're in a new housing bubble, and prices went up 5.4% or another $17,000. Now your $300,000 home is worth $332,000. In 17, home ownership doesn't build wealth, study finds. And then housing went up 6.1% or another $20,000. Your $300,000 home is now $353,000. In 2018, it's better to rent than to buy in today's housing market. Another 4.1% increase, putting your $300,000 home at $367,000. In July of 2019, the housing market is about to shift into bad way for buyers. And housing went up another 4% to $382,000 into 2019. Next year will be hard on the housing market, especially in these big cities. And I went on to talk about these big cities. And pricing went up in 16% that year, which put us into the pandemic years. Rates dropped. Housing went through the roof. There was a housing boom. $443,000 for your $300,000 home. So you would have missed out on a significant amount of appreciation. And we forecast that that is going to continue. And one of the other components of housing is that there is a rising home inventory. When there's a rising inventory in real estate, the market goes from a seller's market to a buyer's market. Buyers drive down the value of homes. And we have, this, again, they're talking about housing is going to come down. I'm going to share a different screen, and we're going to talk about this. So, on this screen, you see this graph showing that as you follow along here, that inventory was going down, which caused this, boom. But now we're seeing inventory going up, 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 and it's home inventory is coming down again. And if it would give you the idea that, wow, look at this tremendous increase in home inventory, and it's only coming down this, this very slight bit here. However, this is a normal cycle in real estate. Going back to 2014, inventory goes up and then it drops, and then it goes up and then it drops. And this has been a normal cycle forever. And the reason why it does this is because most buyers want to be in a new home in, around August, when the kids are going back to school. They want to be settled. And then during the fall, we see an increase in inventory, only for it to drop again once the spring market. So it's a normal cycle. It's something that has been ongoing for years. And CoreLogic Index, which is a national statistical analysis of home prices, predicts that year over year in 2023, home prices are going to increase by 3%. So what does this mean to the home buyer? It means that for those that have been sitting on the fence thinking that I'm going to wait for home prices to come down and maybe rates to come down along with it, I'm going to get a really good deal in, I don't know, pick a month, April, May, June. And the fact of the matter is that one of those might be true. Rates might be lower, but home prices are probably going to be equivalent to where we are right now or slightly higher. So what we've been saying all along, Catherine, is if you find a home, buy the house, and we'll refinance the mortgage at no cost when rates drop. And there's no guarantee on when that will happen. We all just predict that will happen because inflation's going to come down. We may go into a recession. That's typical after high inflation like we've had. But mortgage rates statistically over the course of time have done very well in times of recession. They've come down time and time again. So I'm optimistic about 2023. I think that 2022 was a year of surprise and shock, if you will, because rates went from 3 to 7, and it was a jolt. But I think that now life moves on. People need to move on with their own families and make moves and do what they need to do. But don't hold on waiting for a big reduction in real estate prices, because it's not in the statistically, it's not in the cards.
I agree with that, Peter. We're not seeing the increase at the level that we were during the pandemic of houses, but the home prices are holding steady, and we are seeing what you were just saying, like the 3% increase in home values, and they're kind of our market. What I'm seeing on the realtor side of things is that it's becoming more of a stable market where buyers are not getting beat over the head and having to give and give and give to the sellers. And so we're actually able to see the negotiations happening, making it more of a win-win situation versus when we were in the pandemic. So I think that the year of 2023, we'll see it being easier on buyers.
Right.
And but sellers are still able to, sell their homes at a higher value than what they could have before the pandemic.
Right.
And I don't see those home prices coming down anytime soon.
No, I don't think so either. And remember, there are, for the home buyers that are out there, there are tools that you can use to help take the bite out of higher rates right now. And one of the main ones that has been talked about is a 2-1 buy down, where you ask the seller to fund a buy down. So if the rate today is 6.5, you start at 4.5 in your first year, 5.5 in your second year, and then 6.5 is the rate for the life of the loan. However, by the time you get to year 3, we'll probably be refinanced. You'll be out of that program.
Exactly. We're also seeing a lot of ARMs.
And ARMs are coming back, correct?
Yes.
Yeah.
So that's been a huge increase. And that was something we haven't seen in a while. So
No, when rates
which
are at
is great.
3% or 2.875, why would you do an adjustable? Just lock that baby in.
Exactly. So once again, the motto is marry the house, date the rate. Go ahead and buy now, where you're able to get the home at a lesser amount than what you might be able to next year.
Absolutely.
All right. Thanks so
Thank you,
much, Peter.
Kathy.
Everybody,
pleasure.
this is Peter with Guaranteed Rate. And if you have any questions, his contact information has been listed at the bottom of this video throughout this entire recording. And please feel free to give him a call. He's a wealth of knowledge and loves to share and give great insights, whether you're looking to buy today, tomorrow, or just to get general information.
Wonderful. Thank you. I'm here to help. Weekends and evenings. Call me anytime.
Sounds great.